Guys, I've had a pretty turbulent week this week. Made some money, lost some money, made it back. But I ended off on a strong note and made over £200 in one day trading in the DAX yesterday on Friday. I want to go through some of the trades I made to make that £200 and also go through some of the stocks that I have on my watch list that's ready to swing trade for next week. Let's get straight into it. Hi guys, it's Annie, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check that description section below, you'll see a link to my mailing list. Join my mailing list to get free weekly emails straight into your inbox of all my latest videos. And also join my Discord group called Pip Talks. It's a chat room, free chat room for like-minded traders and investors to talk everything and anything to do with trading and investing. Now, in this video, I'm going to go through DAX. Now, I've done some day trading today. Yes, day trading. I know it says swing trade on my channel, but sometimes I dabble in some day trading and I do all right sometimes when I do. So I saw a lot of opportunities on Friday. So I thought I'd take them. So I started day trading the DAX. So on the 1 hour chart, I saw that I created this line here because I saw that it was a key support and it hit once, twice, thrice, 4 times. And obviously it hit it here again, but this was during the day. So I knew that this line could be a key level to buy at if it hit it. So this line was hit at some point during that day, but I'd already had this line plotted out. So I knew that if at any time price hit it, you could potentially take a long position for a very small risk. You just set the stop loss below there, and I was ready to take that risk to make a certain amount of upside. But if we go down into like the 15-minute chart, so overnight, what I saw was that overnight session, the price of the DAX had gone up a lot. It gone up by 59 pips in overnight session. So this is pre-market. And I knew that the price of DAX had actually closed at about 13180. So it closed out around here. Let me draw a line just to show you. So the night before, the DAX had closed up around here. Now it's not out of the ordinary for the price to trend away from the closing prices of the market the night before. But if it goes too far away, it will probably retrace back because indices are not likely to gap up or down significantly at market open. Normally it'll be a small amount of pips that will be away from where it closed the night before. So armed with that knowledge, I knew that even though it had gone up overnight, I knew that I was going to have to sell off at some point just to come back closer to where it closed out the night before. So what I did was that I saw price was about to sell off around here because like this was a bit of like a resistance line. As you can see here, it hit it once, twice, thrice here. So let me go a little bit deeper now. So when I saw price bottom out here, I saw that this was potentially where the bottom was, just through price action and the candlestick and stick pattern. So what I did was I did a Fibonacci expansion from here to here, and I saw that this was the 50% level. So I knew that price could potentially retrace back to here before selling off again. Now it could potentially break through, but I was ready to go long. So I went long here as well, made a little bit of profit. Now it was ricocheting, price was ricocheting up on this 50% line. Now I wasn't sure whether it was going to break out to the upside and gain back all of it lost overnight, or if it was going to sell off some more. But the 180-day simple moving average was curving down, so I had a kind of feeling that I was going to sell off, but I waited and I waited. And what I did was that I went down into even a shorter time frame. I just waited and waited to see what price would do. And once it double topped and then started selling off, I took a short position and I shorted it down as well. Now when I shorted it down, I could have shorted it down all the way back to, I was waiting for it to hit to this level at 13180. Now I remember I said this earlier, I knew that this line could be a key level to buy at if it hit it. So I said this earlier that this 13180 area was a key support, and I thought, yeah, if price hits there, it could potentially retrace back up. So when I sold off, I shorted it and I sold off my position, and I waited for price to start bouncing up. Now price started bouncing up, but I wanted to make sure it wasn't going to just come back down and sell off again like it did before. So I took a couple long positions here, but it was a bit premature, and because price was just moving sideways, I exited at my position for a small loss. But in reality, if I'd held my position, I would have seen price go back up to the 50% Fibonacci level, which is what I actually called out. But because it was just going sideways for about 2 hours, I kind of lost my nerve and I exited my position. But I was right to think that I was going to climb back up to the 50% level. So all in all, my kind of analysis was correct all the way through these day trades. But the very last one, maybe because of a lot of sideways movement, I couldn't really complete the long position that I'd taken, which would have made me an extra profit. So I don't day trade often, mainly because I don't think I'm a great day trader. I think I'm alright, but I'm good at identifying opportunities and I'm really good at sitting on my hands, which is really important, because I feel that if you day trade, there's a lot more emphasis on the psychological side of trading as opposed to swing traders, because swing traders, they spend a lot of time looking at the charts, really looking for the right setups so that they can execute, and execution isn't as important with swing trading because you're looking for the bigger moves. But with day trading, you have to be switched on way more, which is why I day trade very incrementally when I see real opportunities rather than every day, because then you might start chasing opportunities because you feel that you're sitting at the computer, you've been watching it for hours and you want to make use of the time that you spent watching the chart. So you might find something that you probably wouldn't have traded, but you feel obliged to. For those of you who don't know, so I moved myself to the right hand side because, as you know, on the left hand side is my watch list, and I was cutting out the ones that I wanted to cover. For everyone in my Discord group, you guys know that the purple highlighted ones are the stocks that I normally think are ready to trade soon, and I've called out a couple of these stocks in the chat room on Pip Talk. I've got 3 UK and 1 US stock that I think are ready for great plays next week, so I'm going to go straight into it. The one US stock is ALSN. Now, ALSN is a very interesting one. This is one of the stocks that I found through my Pro Screener, through Pro Screener. I've made a video about Pro Screener anyway, but I don't know if it's up here. If it's up, it'll be in the top right hand corner. As you can see here, it's a converging wedge, and it's doing that thing where it's been ricocheting off to support and resistance for quite some time, and this time when it sold off, it didn't even make its way back to the support line, and it came up to the resistance line pretty quickly. Now what this tells me is that at some point it looks like it will break out to the upside. And I think this will be a great opportunity to see the retracement and then preempt a long position and recapitalize on the upside breakout, because you can make a lot of profit out of this. So what I'm looking for right now, if I go down to like the 4-hour chart, is, yeah, this is exactly what I was looking for. So price sold off, didn't make its way to the support line, came to resistance line, broke out a little bit, but then sold off again, and now it's coming back up. I expect next week that it's gonna break out again. Either just break out straight, or it's going to break out a little bit, come back to the old resistance as a new support, and then break out again. So I think a long position would be a great way to really capitalize off of this. The way I'd play this is take half a position now, and then maybe half position on the retracement. That way that you have some skin in the game, just in case it just shoots up and then you miss most of the move. Yeah, so that's how I trade ALSN. Our next one is Deutsche Bank. This one I called out in the Discord group as well. Now, I did want to preemptively trade this because I didn't know whether price was going to come back up or if it was going to break out to the downside. And the MACD and RSI wasn't really giving me too much clues as to what it was going to do. Now, as you can see, it's another converging wedge. And price had gone up and down. It's gone up, down, up, down. This time it didn't make its way all the way to the resistance line, and it kind of did the inverse of what the last stock that I just showed, ALSN, did, where because it didn't make its way all the way to the resistance line, I was inclined to think that price was ready to break out to the downside, but I could be wrong. So I haven't actually taken a position in this yet. I thought, as you can see these lines here, I thought it was going to break out, retrace back up and go back down again. But I'm waiting to see what happens. As you can see on the 2-hour chart, looks like price might actually be looking to climb up. So I'm just going to wait this one out, to be honest. I'm not going to actually take a position until I feel that a definitive move has been made to one way or the other. I think the best way to do this would be, to wait for price to break out of the 15-day exponential moving average, which is the purple line, and consolidate. But as you can see previously, once it broke out the 15-day exponential moving average, it pretty much shot up, and you don't want to miss most of the move. And here it didn't even shoot up. So what I'm looking for is for price to climb, have one red candlestick on the 4-hour chart, And at that point, that's where you want to take a long, because like as you can see here, let me draw it for you. As you can see here, the one red candlestick on the 15-day exponential moving average was a precursor to a bullish breakout. The one red candlestick on the 15-day exponential moving average, one red candlestick on the 4-hour chart was a precursor to a bullish breakout. So what I want to see is it climb, one red candlestick on the 4-hour chart, and then probably take a long position there. And the great thing about it is that if you take a long position here, you can set a stop loss. The stop loss you can set can literally be just below where the close of that candlestick is. Same here, you can set a stop loss just below there, and then hopefully it'll shoot up. If it doesn't, you only take a small loss. So that's how I want to play this. I could either take a long position, or if it starts selling off and it gets rejected by the 15 exponential moving average, then we know that it's a short. So this one's kind of like a wait and see one, but that's what I'm looking for on this play. Now we've got IMT, Imperial Brands. Actually, got a little question for you. What sector is Imperial Brands in? Answer in the comment section below. What industry sector is Imperial Brands in? 10 points to anyone who gets the answer. Points not redeemable. So I've actually taken a position on this already, as you can see on my chart. What I saw here was that on the daily chart, the 180-day simple moving average was curving down, which is a sign of a short play. It's in like a descending channel pattern, as you can see. Hit this point here, hit this point here, and this would have been. This is a great. I feel this is a great position to short it, because previously hit the resistance line and then sold off, and when it sold off here or here, it dropped pretty fast. It dropped 400 pips in 7 days. So I'm expecting something similar again. The RSI curving down, kind of, yeah, just needs to, and then MACD curving down. So all of the indicators are telling me that it's a short. Now I've got my stop loss set at, it's quite an arbitrary point. I set it just based off of how it moved the last time. What I did was that I just kind of did a ladder. I love my ladder tool. Did my ladder tool, and then I moved it, and it takes you to about the same place. So that's the reasoning behind why I set my stop loss. So hopefully if it makes the full move, I can make about £300, and I'm only risking about £70. So that's a great risk to reward ratio. That risk to reward ratio, what's the maths on that? That's probably about maybe 5 to 1, something like that. 5 to 1 risk to reward ratio, which is really good. I wouldn't mind risking 70 quid to make a potential £379. So I'm gonna just let this one run and see that over the next couple of days how this plays out, and if it gets all the way down to the support line here. And last but not least is SMDS, DS Smith. This one is an expanding wedge. If you know about, I've made a video about broadening wedges, or expanding wedges, as I sometimes call it. I've also made videos about converging wedges. Check them out and see how I identify the plays to make on these charts. Now, as you can see here, it's expanding wedge. Price has ricocheted off of the support and resistance line several times. I set an alert on the resistance line because I thought at some point it's going to break out, and I believe Monday morning it's just going to spike up. It's going to break out. So if any of you took a position Friday night, then you're lucky bugger, because I feel like you're going to make a profit on market open on Monday. The reason behind I feel that is because expanding wedge, the way you play these is that you wait for price at some point to retrace down to the halfway point and then either go up or go down. At that point, that's where you think that it's going to break out. Also, the 180-day simple moving average is below price and looks like it's curving up, so that's a bullish sign. Price is retested the resistance line twice in a short space of time. It hasn't done that previously, so and as I've said before, you have to treat support and resistance lines like glass windows, and your price action is a hammer. Every time you hit it, it gets a little bit weaker, and if you hit it enough times, it will break and then you can go through. So here, I feel like this is the point at which it's going to break through at some point. Monday, it's going to break out. And once again, the play for this would be to either, if you're taking a position already, then you're laughing. If you haven't, then fret not, because I believe that you can play it this way again, where you let it climb, or you could enter on market open, half a position, let it retrace back down, enter the other half of your position, and then let it climb and keep going. So you can enter market open, enter on the retracement, and then you're laughing. Or you can just enter the full thing here. But if you enter the full thing here, you have to have a strong stomach, as I say, because if you enter the full position here, it's going to go up, you're going to be in the green, you're going to be happy, then it's going to sell off, and then you're probably going to go back to break even, but then you'll get in the green again. But you don't want to just, like, I don't know, I just think it's better if you just enter half and enter half again. But that's just the way I'd play it personally. So those were the stocks that I'm covering for the next week. If you have any stocks that you think I should add to my watch list and cover, leave them in the comment section below. It's Any, aka the Noctrader, signing out.